Hi, and welcome to my channel. My name is Cherilyn Williams, and I am your local Chicagoland realtor, helping you build your dreams through real estate. And today I'm going to share with you in this video everything about one of the most important steps in the home buying process. And that is the underwriting process when you are under contract for a new home loan. I'm going to explain what underwriting means, what do you need to have ready for your underwriter, what things is your underwriter looking for to approve you for a home loan. And lastly, I'm going to give you some takeaway tips you can use to make sure the process runs as smoothly as possible so you can have an easy closing day and become a new homeowner. As always, please like, comment, share, and hit that subscribe button to receive weekly real estate content that is just for you. Now, mortgage underwriting is what happens behind the scenes once you submit your application. This is the process when a lender takes an in-depth look at your credit and financial background to determine if you're eligible for a loan. Now, the first step is to complete your mortgage application. The information you provide will help determine if you're eligible for a loan. These documents will be submitted to a lender of a bank or even a mortgage broker. Since every situation is unique, the exact documents you'll need may vary. But here's a list of the things that you will more than likely have to provide. Your driver's license or ID and social security number, any pay stubs from the last 30 days, W-2s or I-9s from the past 2 years, proof of any other sources of income, federal tax returns, recent bank statements, or proof of other assets, details on long-term debts such as car or student loans, real estate property information, like if you have an accepted offer to purchase signed by all the parties. So this will be how you will begin the process, and it's a good idea to start organizing and getting these things together a couple of months in advance before you begin the process of connecting with the realtor and touring homes. Now, step 2, you have to be very patient with this review process. And this process can be the most frustrating experience for many home buyers because the underwriter may ask for documents over and over and over again. And you would have sworn that you have already submitted these documents once or twice already. And I have worked with a few clients who have wanted to give up during this process because it was just frustrating for them to have to keep sending the same documents back and forth to the loan officer or underwriter. But once you've submitted your application, a loan processor will gather all the necessary documents for the underwriter. A mortgage underwriter is the person that approves or denies your loan application. So the underwriter is looking at a variety of factors, including your credit history, income, and any outstanding debts. The main 3 things that the underwriter is looking for are the 3 C's. That is your credit, capacity, and collateral. So let's talk about these. Starting with your credit history. This is one of the most important factors in the mortgage approval process. The underwriter will review your credit report to see how well you made payments on different loans. This could include car loans, student loans, and other lines of credit you may have. They look for clues that will help them predict your ability to pay back what you borrow. The next C is your capacity. With capacity, they are trying to determine whether you have the means to pay off the loan. The underwriter will review your employment, your income, debt, and assets. They'll also look at your savings, checking, 401k, any RIA accounts, tax returns, and other records of income, as well as your debt-to-income ratio. They want to see that you and any co-borrowers have the ability to make the payments both now and in the future before they give you any loan. And the last C is collateral. By using the current market value of the home, the underwriter will make sure it serves as ample collateral for the loan. This assures the lender that they can recover the unpaid balance in case you default on your loan. The underwriter may use an appraisal or other form of valuation to assess the home's worth. Step number 3 is getting the appraisal. A valuation of the property is required to confirm the home's value aligns with the purchase price. So the value of the home is determined by the home size, location, condition, and features of the property. Comparable homes in the neighborhood also help to come up with this value. Getting evaluations such as an appraisal protects you as the buyer, and it protects the lender by ensuring you only pay what the home is worth. If the home is worth less than the asking price, you may have to bring more money to the closing, or you may have to negotiate a lower price, or you could have to walk away altogether. The lender wants to be sure that your loan doesn't exceed the property's value so that in the event of a default, they can recoup the money loaned to you. Step 4 is protecting your investment. This is where title insurance and homeowners insurance come into play. Title insurance and homeowners insurance are two useful measures that help protect your investment. A look at the property history gives you peace of mind about what you're buying, and it helps reduce the risk of future title problems. The title search ensures there are no liens, claims, unpaid taxes, judgments, or unpaid HOA dues on the property. Once the title search is complete, the title insurer will issue an insurance policy to guarantee the accuracy of the research. Proof of homeowner's insurance will also be required. You'll need to provide a copy of the insurance declaration page and either a paid receipt or an invoice for 12 months coverage before you close. Now, step 5, the underwriter will make an informed decision. In this step, the underwriter will either approve, deny, or pin your mortgage loan application. When you are approved, you may get a clear to close right away, which is what you really hope for. If so, it means there's really nothing else you need to provide, and you and the lender can schedule the closing, which is awesome. It's an exciting time. However, if your approval comes with conditions, you'll need to provide, something like a signature or some more tax reforms or any other prior pay stubs. Then they would wait for you to get those things in, and then they would approve the loan for you. Now, if an underwriter denies your mortgage application, you'll need to understand why before deciding on your next steps. There are many reasons for the denial of an application. For example, let's say that, they just discovered that you have too much debt, you can't take on the loan, or you have a low credit score, or you're not eligible for a particular loan type. Once you know the reason for the decision, you can take the steps to address the issue and try again. You can also be faced with a decision pending if you don't provide enough information for the underwriter to do a thorough evaluation. This may cause them to suspend your application. For example, if they can't verify your employment or income, it doesn't mean you can't get the loan, but you'll need to provide further documentation for them to decide. Step 6 is closing with confidence, and this means that we can congratulate you. You made it to the closing day. And at least 3 days prior to the closing, you'll receive a closing disclosure or CD from your lender. It includes the loan terms, your projected monthly payments, and your final costs. You'll need to review this document very carefully, and especially the funds that you need to bring to closing. And if you have any questions, please ask your lender. You'll also make arrangements for your down payment and closing costs. So plan to bring a driver's license or photo ID and a cashier's check for your closing costs to the closing. At your closing, you'll be there to sign all the final paperwork, pay any closing costs that may be due, and then you'll get the keys to your new home. So now let's talk about how long does a mortgage underwriting take. So each situation is different, but underwriting can take anywhere from a few days to several weeks. If you have missing documents or missing signatures, and if there's any issues with the appraisal or title insurance, it can really hold up the process. So always be very responsive to requests for information that the underwriter needs from you. And if you need more time to gather requested documents, just communicate that with your mortgage loan officer. So here are some tips in order for you to have a smooth underwriting process. Your lender is going to handle much of the underwriting process for you, but these are some things that you can do to make sure your experience is a positive one. The most important thing is to keep your debt in check. While your loan is processing, avoid taking out any new debt or making other financial changes like closing credit cards or other accounts. Anything that affects your debt to income ratio may impact your mortgage approval, so don't do it. Stay in touch with your lender and don't just disappear during the underwriting process because there may be some questions or the need for more information. Like I said, respond promptly to any requests from your lender to keep your application moving forward because this is a real critical time. Also, please be honest about your finances. There's no need to hide or feel embarrassed about your information. It's important that the underwriter knows everything about your income, your credit, and if you want to, you can write down notes or provide explanations for anything that may stand out on your credit report or statement, such as if you had a missed payment. It's a simple thing you can do to help the underwriter make a quicker decision on your loan approval. Knowing what to expect during the mortgage underwriting process can make it easier to navigate. The more prepared you are, the better off you'll be. So keep your debt in check, stay in touch with your lender, and be honest about your finances. All these steps will bring you closer to becoming a happy homeowner. Thank you for watching.